As the page turns on 2021, it has been a record-breaking year for the property market. There's a series of plot twists and turns making it a year to remember. 2022 is likely to prove to be calmer, but after 2020 and 2021, few would wish to predict the property market a year from now. 2021 has proved to be a year of twists and turns. The country began the year in lockdown, but demand for property flourished as spring took hold. Sales records were broken and demand continued at pace, buyers eager to benefit from the stamp duty holiday. So with over 500,000 purchasers benefiting from that 0% property taxation in the first 9 months of 2021, according to HMRC. Gardens, more space, quality broadband top the wish list for buyers, with a shortage of supply strengthening price growth. Underpinned by the huge success that we had with the COVID-19 vaccination programme, normality resumed, albeit for many the daily commute has been consigned to history and hybrid working patterns becoming increasingly common. The economy has proven resilient, the impact of the end of the furlong being less significant than predicted, and consumer confidence bouncing back to pre-pandemic levels over the course of the year. However, the impact of price rises on household incomes makes an interest rate rise likely, and the developing situation with the COVID-19 Omicron variant will be monitored closely. As the end of the year approaches, Zoopla report that demand in the market continues to be stronger than usual. Although sales volumes and mortgage approvals have fallen since the stamp duty holiday curtain fell at the end of September, the Bank of England report that 67,199 mortgages were approved within October, the lowest monthly total since June 2020, but on a par with the monthly average witnessed between 2015 and 2019. A shortage of homes for sale and new supply, particularly houses, continues to limit choice for those needing to move, although Rightmove reports a 14% year-on-year increase in property valuation requests, a sign of building momentum. Nationwide report that a 10% annual property price growth remains in double digits in the year to November, although the conscientious forecast for 2022 is that price growth to pare back to a more stable 3.8%. Such growth is in line with the 3.9% rise in earning predictions over the course of 2022 by the Office of Budget Responsibility. Inflation is anticipated to place pressure on consumer prices within the first half of 2022, and interest rise is predicted, possibly when the Bank of England Monetary Policy Committee meets before the end of the year or early next year. The average price of a prime market property in England and Wales is now over 1.15 million, a year-on-year increase of 6%. Activity levels in the £1 million market have soared. The Land Registry has logged over 18,000 property sales priced £1 million or more over the past year, of which over half have been outside of the capital. This compares to just 41% back in 2018-2019. High-value areas outside of London have seen a swath of activity, 64 of those locations seeing 50 or more £1 million plus purchases over the past year, compared to just 44 in 2018 and 2019. While the proportion of sales in the prime market heartlands of London and the South East have fallen, sales volumes in areas including the East of England and the South West have soared. The majority of sales outside of London are for large detached properties offering close to 3,000 square foot of space, whilst premium apartments and converted terrace properties account for 2/3 of the market within London. The opening of the travel corridor in recent months led to an increase in overseas purchasers. 5,500 property sales have been subject to the additional 2% surcharge for foreign buyers introduced in April.